Hello everyone, good morning and thanks for joining us today and welcome to this educational presentation of how to fine-tune your exit levels with range extensions. Range extensions are a great way to determine how to exit, and there are literally dozens of ways to trade with them. In today's presentation, I'm going to share with you a really simple but powerful technique to apply with range extensions so that you can capture as much as possible once you enter into a position, regardless of what market or regardless of what time frame. For example, today I'm going to share with you a simple technique. If you had received a buy signal, as one of our strategies did, I believe this was strategy number 5, received a buy signal on the 21st of March in Starbucks. Now, prior to even entering the trade, you could have found out that this would have been a perfect place to exit the entire position. And as you see, just in a couple of weeks, 2 or 3 weeks, it would have reached that point. I'm going to show you how simple it is to apply range extensions to your trading and show you how even more simple it is with our platform. This is the PTS Primo charting platform, the educational portal that teaches you how to trade. So once again, welcome to this educational presentation. My name is Stephen Primo, president and founder of Specialist Trading. I teamed up with Pro Trader Strategies with one goal in mind, it's just simply to educate you as a trader. We really feel that education is what's missing from most traders' trading plan, really, because it's been estimated that 85% of all traders fail. And my opinion is the reason behind that is because you're basically taking yourself out of the game. You're relying on somebody to tell you how to trade, or somebody to tell you where to buy or where to sell, what market to trade. I mean, think of it. Think of your own trading plan. Do you have tons of indicators that are supposed to tell you exactly where to enter or where to exit? Or do you go to a blog every day to find out what they like or what they don't like about the markets? Or do you go to a chat room or trading room where everyone is giving their ideas and telling you the perfect time frame or market? This is the way most traders trade. I know myself, when I first started trading some 4 decades ago, this is the way I was taught to trade. Because the more information you get, the better qualified decision you make, right? Well, unfortunately, it does the opposite. The more information you get, it takes you out of the game and you start to rely on these things to tell you how to trade, what market, what time frame. And this is, in my opinion, why most traders fail. I've been trading long enough to really get enough experience and to really get enough techniques and accumulate enough really positive and consistent trading plans to know what works and what doesn't. So this is why we created Specialist Trading, so that you could put the power back in your hands and ultimately make your own trading decision. Now today I'm going to share with you a great exiting technique to fine-tune your exits, to pinpoint where these exit levels are. I'm going to share with you just one of the many techniques you could use with range extensions. But as always, before we begin, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results, a lot of different markets and different directions using range extensions, but please remember that we can in no way guarantee that any of the results we're about to share with you will be repeated. And also please remember that all examples are strictly for educational purposes only. Okay, and also once again, while you're taking a brief moment to view the required disclaimer, I would also like to invite each and every one of you to follow us on Twitter. I post different information on a daily basis. Go back and check us out at SPCLST, TRADG. You'll see that I've posted a lot of signals our strategies have generated and lots of little bits of financial wisdom to help you along your way. So a lot of great free educational information. Feel free to follow us on Twitter. Okay, so once again, our goal is simply to teach you how to trade. If you've come to my webinars in the past, or this is the very first one you've attended, we have a good sized crowd here today on this Saturday morning. If this is the first time you've attended my webinars, you'll see we're a little bit different from other presentations you may have seen. For example, if you've come to find out what to buy next week, or if you've come to find out how to trade, what to buy or sell off of my recommendations, you've come to the wrong place. That's not what we do here. As you see, my goal is not to force feed you signals. My goal is not to tell you what time frame. My goal is not even to tell you what market to trade. My goal is simply to teach you how to decide for yourself what you want to do in these different markets, time frames, how you want to trade. That is the only way, in my opinion, one becomes a consistent trader. All right. Sure, you can spend $10,000 on some master plan and you'll have a good couple of months, maybe even a good year. But most likely you're going to give it all back. And most likely that's why you're here today, because you've gone through that already. I know I did when I first started trading. So the only thing that makes you a consistent trader is putting the education in your hands so that you can make the decision yourself as to what you want to buy, what you want to sell, what time frame, what market, okay? And that's what we provide. That's the gap we fill at Specialist Trading. So my goal is to teach you how to trade with a specialist edge. This is the same edge that was taught to me 4 decades ago, and what I firmly believe is the cornerstone to having me be able to trade for 4 decades. And hopefully it will be able to do the same for you. So this is just going to be conducted like a classroom today. By the end of today's class, you'll know how to properly use this technique with range extensions. But since it is a class, I want you to ask as many questions as possible, but please wait till the end. If we stop for every slide, I promise you we'll take far too much time of your Saturday morning. I don't want to do that. I know this is a holiday weekend. So this doesn't promise to be a long webinar, but I want to share with you all that I can show you in today's webinar. So please, if you have a question, wait till the end to ask. I promise I'll get to each and every one of them. The only question I will answer is the most popular one, and that is this being recorded? Yes, we record all of our webinars. If you have to leave early, if you have any technical issues, you can't see or hear the screen, don't worry. We'll send each and every one of you a link to this recording, all right? Okay, with that stated, let's begin today's presentation. Now, first of all, I know a lot of you are familiar with range extensions, but many of you may not be, okay? So what exactly are range extension levels? Well, I'm going to share with you the formula for properly identifying and how to calculate these levels. But before you can calculate that, you have to know what a setup bar is. Now, a lot of people aren't familiar with that. Setup bar simply means that when all the rules of your trading plan, it doesn't matter what it's based off, it could be based off the fundamental news at the moment, it could be based off some indicators, it could be based off the tides of the ocean. It makes no difference what it's based off. We don't care about that. And today we're not going to share with you or teach you a strategy. All we're trying to do is say, when these rules all come into play, when everything, either the news or the indicators come into play and everything has been met, all the requirements are met, that's the bar that's called the setup bar, because it usually happens during a bar, and at the end of that bar, the close of that bar, whether it's a daily bar, a 5-minute bar, or a weekly bar, doesn't matter, it makes no difference. That is labeled your setup bar because you have the setup for a signal, whether it's a buy signal or a sell signal, okay? So you have to become aware of that. If you've never known that before, you don't just make decisions based off a whim. There is a bar associated with that. Now, here are the rules for calculating range extensions, all right? You want to measure the range of that setup bar. Remember, that's where all the requirements were met. And let's say you were going long. Well, you're going to add that range to the top of the setup bar. If you're going short, you're going to subtract that range to the bottom of the setup bar. And that will equal a 200% exit level, your first exit level, okay? And you continue to do this, adding, subtracting that range again equals a 300 exit level, and so on. So you can go as high as you want. You can go 3, 4, 5, 600% exit levels, but they're based off of the range of the setup bar. Now remember, when we say range, we don't mean open to close the way for some reason it's been calculated now as the range. Range means, its true definition means the extreme high and the extreme low of the bar. So if you're looking at candlesticks, that's the top of the wick and the bottom of the wick. That's the range. So if you have a bar that, say, has the top or bottom for, just to make it simple, of 1 point, well then if you're long, and if you had a buy signal, you simply add that 1 point to the top of that bar, and that will give you your first level. You add another point, and that will give you your second, third, and fourth, and so on, okay? Let me share with you what I mean here on this generic chart. Let's say this is your setup bar. Let's say it's based off of some earnings report that came out overnight. So this is the bar that you made the decision to go long based off your plan. In order to calculate these range extensions, you want to measure the top, the extreme top to the extreme bottom of this bar. Remember, not the open to close. I don't know why or how that came to be known as range. Range is the extreme top and extreme bottom of the bar. Okay, so that equals 100%, whatever amount it is. Could be 1 point, could be 10 points, could be 2.65 points. It makes no difference. But whatever that range is, then you want to add it on top of that bar, and that will give you your first exit, or the 200% exit, because it's 200% of the original range. And then if you want to add it again, well, that will give you your next exit level of 300%, and so forth, and so forth. You can continue adding these as much as you want. Now, it works the same way to the downside. As you can see here, you would have exited right here at this point, or either one of those points if you wanted to. Now, to the downside, let's say you get a sell signal. Let's say based off some indicator, all the indicators matched up at the close of this bar. So this is your setup bar. First thing you want to do is measure the range, all right, from extreme top to extreme bottom. That equals 100%. Now, whatever that range is, could be 1.85 points, could be 5.23 points. It makes no difference. It could be simply 1 point. Whatever that amount of points is, you subtract it from the very bottom. That will give you your first exit level. That's the 200% range extension. And then you can continue to do that as much as you want. So these are your different levels, okay? Very simple to calculate, but it must be based off the setup bar. So you have to know where your setup bar is. You can't just blindly be buying and selling without knowing this. You have to have a plan. You have to have a little structure in the way you trade. And as we see here, you would have come down to these levels. You could have decided how to trade. So it's fairly simple. A lot of people say, okay, well, this is easy to do and to apply. But, you know, if you're intraday trading, if you're daily bar trading, it's okay. It's simple to calculate. But let's say you're trading tick charts. It makes it a little bit more difficult. So we're going to share with you how simple it is to apply this using our PTS Primo charting platform, because it's automatically there. This is the educational portal that automatically generates these exit levels. So we've taken the hard work out of it for you. So you'll know exactly where these exit levels are. Okay, so I want to share with you one of the techniques for applying to this simple range extension level technique I'm going to be sharing with you today. There are literally dozens of ways to trade with this, and this is what we want. We want to encourage you to trade any way you like. Remember, we are not here to tell you how to trade. I'm just sharing with you one technique. You can decide to use this if you'd like, or you can use a different style. You can something that you've come up with or something that you see. But remember, it would be doing you a disservice if I told you this is the way you must trade. I mean, that's a recipe for a disaster. This is the way most educators, so-called educators, have webinars, and this is why most students fail. So I would never tell someone how to trade. What I would do, and what I do is provide them with the education. But ultimately, you've got to make that decision. That's how you become consistent, not by me telling you what to do. All right? For some reason, the industry is entirely based on people being told how to trade. That's why, if you put two and two together, that's why most traders fail, because that concept doesn't work. You have to be given the information, you have to be mentored, and then you have to decide how you want to apply that information. Okay. So let's look at an example here, going through some stocks, and then we'll look at some other markets and share with you a simple technique for applying using these range extensions. Remember, there are literally dozens of ways, and new ways being testimonial, told back to me from our students, but it's up to you to decide. I'm just going to share one of them with you today. All right, we're going to be using one of our strategies, which is strategy number 5. These are actual signals that were generated using our strategy number 5, which is a great candlestick pattern that we look for. All right, a buy signal once again in Starbucks. This is the original example we shared with you in the beginning of the presentation. On our platform, all you have to do is click on the strategy number 5 tab here. This is the strategy. Drop-down menu appears, and click on range extension. Okay. The minute you have a signal generated, it automatically generates where these levels are. It generates the first 4. Okay, and I'll explain to you why it generates 4. So here's one specific trading plan and one technique you could do while applying these levels. All right, so let's say you've entered into Starbucks. You say you entered on the close of this bar where all the rules came into play. And when you get up to level number 1, okay, wherever your stop was, if it was way down here, if it was just below this bar, it doesn't matter. But when you get to level 1, you can move your stop up to unchanged. In other words, if you expect a big run, this is one technique, you can move your stop to unchanged. So this means you have nothing to lose. If the stock all of a sudden turns around, well, at least you broke even. But now we have our stop here at unchanged. Now the stock goes higher. In fact, it crosses level 2, exit range level number 2. So now you move your stop up to exit number 1, all right? This first exit level. Okay, so now if it turns around, well, at least you have a nice profit, all right? So we sit here and wait. It looks like we're going to come down and touch, but the rally continues, and we've gone back up to exit level number 3 now. Okay, so what we do, can we do? We move this stop up to the second level. Okay, so what we're doing is we're tracking it with these range extension levels. So if we decide to roll over, well, we're going to have a nice profit. We bought down here, and we have this much protected. So we're tracking the trade and we're protecting our profits. We've gone on to exit level number 3, and as we can see, we move up to intersect exit level number 4. Now, you have a number of options. You can continue doing this all the way using exit level number 10, 11, 12. It's up to you, but it's been our experience. So this is just a suggestion, not a requirement. Rather than moving your stop up to exit level number 3 and just saying, wow, I can just keep doing this. Sure, you could, but it's been our experience that most times when you get up to exit level number 4, that's when either the rally or the sell-off ends, and the market either goes into another trend to the opposite direction, or at least goes through some type of pullback phase. So we would suggest, if you're going to use this, to exit the entire position at exit level number 4. So do you see how this worked? I mean, it was just so simple. There's nothing you have to look at fundamentally. You don't have to look at the earnings. You don't have to look at the PE ratios. You don't have to look at what the institutions are doing. You just use these range extension because the market is going off of its basic range. And it's as simple as that. And someone will say, well, that's too easy. I mean, how does the market know the range? Well, let me show you some more examples so you see how this works. It's a very simple technique. Here's a sell signal in GILD, okay? Once again, using strategy number 5, the same strategy. This happened on the 4th of March, about a month or so ago. All right, let's say all the rules came into play on this bar. This is our setup bar. And we got short right at the close. All right, where do we want to exit? Because you have no one really knows how low or how high something will go. So how do we determine where to exit? Well, why don't we just track the market using range extensions? So you click on strategy number 5, okay? In the drop-down menu, click on range extensions, and they automatically appear. Now, the chart wasn't big enough. If we wanted to tighten up this chart, we would have seen that we had much more range extensions going lower. But let me just share with you the first 2, okay? So we got short right at the close. And let's watch and see. In 2 days, you have a nice trade going in your direction. And you already intersected exit level number 1. So you want to move your stop wherever it was to unchanged right here. So if you get caught when the market goes back up the wrong way, well, at least you didn't lose any money. Now, here's what I want to explain to you. This is not an exact science. So you have a little room for discretion. In fact, we always tell our students, it's not, these are not magic numbers. It's not like, well, I can't move my stop because it's 2 ticks away from exit level number 2, so I can't do anything. It's not an exact science. It's not written in stone, so you can decide for yourself. If you get close to this level, you're perfectly in your rights to move the stop. Remember, this is your decision, not ours. So as you can see, what happened next was we got very close, maybe 1 or 2 ticks away from that level. So let's just say, our discretion, we decided to protect that move, and we moved our stop down to here, okay? Now, the very next trade, look what happened. We got stopped down. So, at least we have a profit. We sold short here, we covered right here, and someone would say, boy, I hope it doesn't continue to go lower. Well, it may have gone, but at least in this example, you protected yourself, and what turned out to be a profit could have easily turned into a loss. If you had kept your stop somewhere up here where you originally, well, now you've got a loss because this is where you entered and price is above. So this is a great technique for protecting your profits. Just one of the many ways in which to use range extensions. Let's look at another example here in CERN. This is another buy signal using strategy number 5. All right. The market looks like it's going nowhere, but this strategy generated a buy signal. Okay. Now look at the ranges. They're very small. They're very tight. We click on the strategy number 5 drop-down menu, and we click on range extensions, and they automatically appear. So let's say we want to use that same technique, and we want to say, well, if we get up to level 1, we'll move our stop, which is somewhere down here, up to unchanged. If we get up to level 2, we'll move it up to level 1, and we'll just keep locking in profits, most likely exit up here, okay? So this will be a nice profit. And so that's what you want to do, and then look what happens. The very next day, nothing much happens. You're still in the trade. You haven't been stopped out. And then you have a really nice gap up, which supersedes all these exit levels. Well, another suggestion we would make is just simply to exit on the opening. If you get an indication that this is going to gap up much higher than the 4th level, since we would normally say exit at the fourth level, we would by all means say, boy, if it's way above the fourth level, then you should. You've got a nice profit. You want to take it. This is another way to trade with these. As we look at urban right here, we have another strategy number 5, sell signal that was generated on this pullback to the upside. The strategy is telling us the trend is down, so we're not looking at this as some type of bottom. We're looking at it as a selling opportunity. First thing we do is find out where the exit levels are. And here we have all 4, okay? So if we want to track the trade, if we feel there's a long downtrend that's going to ensue, we'll use this particular technique. All right, so as we can see, we got short right on the close, and it worked out pretty well. We got to level number 1, so we move our stop right here to where we got short. All right, so this way, if we turn around, we're just going to break even. And as we track the trade, well, about a week later, we got to exit level 2, so we're going to move this stop down to level 1. And this way, we are protecting our trade. Okay, so now we got a profit no matter what. All right, so let's continue to track. Well, it took a little longer, maybe about 3 or 4 weeks, but we ultimately got down to level 3 exit. So now we're going to simply move our stop down to level 2. Okay, on this bar, we intersected level 3, so now we're at level 2 for our stop. So now we have a nice profit locked in. Okay, 3 or 4 weeks later, we ultimately get down to level 4. Once again, we have the option to move our stop down here, but we would suggest when you get to level 4, especially if you're beginning to use this, rather than move your stop to level 3, to exit the entire position right here. Why? Because many times the trend often changes and you don't want to give back a nice profit. So especially in the beginning while you're learning this technique, if you get to level 4, the exit level 4, I would get out of your entire position, okay? Another example here. Here's a weekly chart of Apple. And you don't just have to use this on daily bars. Here's a weekly chart of Apple. Another strategy number 5, buy signal. It's the same strategy, all right? You click on the drop-down menu and you choose range extensions. Now, because the chart is smaller here, we're only able to show you the first 2, but trust me, we give you all 4 of the different range extension exit levels. Now, you want to use the same technique. Let's say your stop is somewhere below this lowest low prior to your entry. You've entered here. This is more of a swing trade, or even perhaps this is a investment. Even if you had options, I know a lot of you trade options. And you said, well, Steve, what if I had traded options? Remember, we always tell our students to take the signals and the setups based off of the chart, not off of the option price. So this is why we're not really an option course per se, because we're taking all of our knowledge from the actual stock, future, or currency pair price. So we know that if you're trading options, you're not going to get the same price you would, or the same max potential profit or loss as you would with trading the actual stock, because of the time decay and all the other factors involved, the premiums. So it's up to you, but you can still apply options if you'd like. Let's say you purchased either the stock or the options once this bar closed here because the buy signal was generated. We know the 2 exit levels, and right away in the next couple of weeks we get up to exit level number 1. So we move our stop wherever it is to where we got long right here. So now we're just going to break even. Now remember, once again, if you were trading the stock, you would ultimately break even, less commission costs. If you were trading the option, even though we're back here at break even where the signal was generated, you may have a loss because of the time or the premium factor. Now, in this example, we're locked in at least breaking even. Now, price goes up even higher. You've got a nice profit. We've got to exit level number 2, so you move this stop up here. So yeah, you've got this profit at least locked in. You feel confident. You go, that's great. I don't have to do anything. I'll wait to see if we get up to exit level number 3, and I'll just continue to move this higher. But look what happened. You got stopped out. You still got a nice profit. You got stopped out. But remember, this is why this technique is really good, because it locked in a profit for you. Sure, you didn't get out at the very high, but would you rather have stayed in with your stop at the old level? You would have ultimately been stopped out. So this is a great way to track the progress of your trade. Now, we can also apply this to other markets. Just real quick examples here. Here's one in an hourly chart of the E-mini futures. All right, same thing. We have a buy signal generated right here. All we're going to do is the same exact thing, measure the range from top to bottom, and then we simply add and continue to add. But we've taken all that work out of it for you. We've, in this example, this is a strategy number 4 example. You do the same thing, click on the drop-down window and range extensions. And because this is a smaller chart, if we resized it, you would see the 3 and 4 exits. But because of the size of the chart, and because we're sharing with you just this portion, you're only seeing the first 2. But you could use the same technique. Let's say you wanted to use another technique. Let's say that you were, a short-term trader. This is an hourly chart of the E-mini, after all, and you wanted to exit your position. Well, one of the other ways to apply this technique, once again, we're just sharing with you different ideas, is to exit a portion right here at exit level number 1. And as you can see, as the E-mini came up to that 1, you could have exited half of your position. And now at this point, you'd move your stop to unchanged. That way, at least half of this position has a profit. And then once you got up to level number 2, you'd exit the remaining portion of your position, okay? And so you've got half of your exit here, the other half right here, and you've got a nice profit. And look what happened after that. So you got a nice profit locked in, and you're out of the trade before you would have, at the very least, broken even. You can do that with currency pairs. Same exact thing. This is a Canadian dollar example. You got a buy signal in the Canadian dollar. We're not changing anything. We would click on strategy number 4 and click on range extensions. Now, for the very first 2, if you're a quick trader, once again, you could use this as exit level number 1. You exit half of your position. And once you got up to level number 2, you exit everything. And you see that you had a nice profit locked in. Okay, so let's recap before we go to questions and answers. Remember, the way to calculate this, if you want to do it on your own, is to measure the range of the setup bar. The setup bar is where all the rules, regardless of what they are, they could be fundamental rules, they could be indicator rules, regardless of them, they all come together and they all meet and all the requirements are met. That is your setup bar. It could be a 5-minute bar, it could be an hourly bar the way we showed you, a weekly bar, makes no difference. Now, adding and subtracting that range, whatever that range is of the setup bar, to the top bottom of the setup bar equals a 200% exit level. Now, you're going to simply add if you're going long or subtract if you're going short that range again, and that will equal a 300% exit level, and so on and so on and so on. You can continue doing this up to 50%, 51%, 50. It's up to you, but we would suggest, especially in the beginning, if you're calculating this, to exit at the exit level number 400, because usually that's where the trend changes, okay, or at least a pullback is in store. You don't want, and you want to lock in your profits if you can. Now, as we close here and we go to the question and answer portion, do you think this tool could have helped your trading this past year? Go and experiment with it right now. Go back and look at your last 5, 10 trades and see if you could have done this and captured much more than you did in your previous trades. It's so simple, it's easy to calculate, but if you're an intraday trader and if you're trading, a fast market, it can get a little cumbersome. It can get a little difficult to calculate this if you have to move quickly. So we have a great offer for you today. We're going to take all the hard work out of it for you and offer our PTS Primo charting platform. This is the platform that automatically generates these range extension levels. And we're going to give you a 30-day trial for only $7, less than the price of a cup of coffee at some places I've seen at some new bakeries and shops. $7, and you're going to get a full month. But you're not going to just get that. Let me show you what else is included in this. Obviously, you're going to get our exit, but we're also going to throw in our entry and our trending tools as well. There are automatic tools that can help your entries and exits and trending. I've given past webinars on Saturdays about these tools, and you can go back in the archives and check for yourself. We're also going to throw in our enhanced buy-sell line. This is a great tool that I've told in the past that I wouldn't leave home without. This is the one tool, if I were only left with one tool to trade with, it would be this. And this, we have 4 different features for our buy-sell line. It tells you the overall trend of the market instantly. Now, we're also going to throw in our proprietary strength of trend tool. This is something we've developed at Pro Trader Strategies and Specialist Trading. And I've given past webinars about this as well, where it tells you the strength of trend, and you can decide for yourself if you want to stay in the trade or if it's showing signs that it's weakening. We also include a signal scanner. So for our strategies or for our different techniques that we also give for you free of charge on the trial, you can scan for those setups. Over 90 of the most prominent technical indicators, along with free Bloomberg TV. If you're not a technician but a fundamentalist and you like to listen to all the live economic news as it's being reported, you have an icon we have called our media page icon. Simply click that on, and a live viewing of Bloomberg TV is on your screen. And lastly, personalized tech support. Any difficulties, any tech issues you're experiencing, will be there in a matter of moments to resolve any issues you may have. This is all included for only $7. At the end of 30 days, you can decide for yourself if it's your cup of tea or not, but you're going to get all of these things along with educational videos, and included in that is educational correspondence with yours truly. If there's ever a question about trading that you don't understand, something involved on the platform, you can email me at my private email address, and I'll answer the question as soon as possible. So here's how to take advantage of this. You can call 310-598-66 if you have more questions. That's the number for the Pro Trader Strategies. They have trading consultants manning the phones right now. They would be happy to answer any of your questions. That link you see at the very bottom, that's a link, a live link that will take you to the sign-up page. I'm sorry, that's not a live link. You have to copy and paste that. A live link is on the chat box, excuse me. On the chat box, simply click that link on and it will take you to the sign up, okay? But if you're having any technical issues, if you can't sign up on the internet, or if you're having trouble with the link, don't worry. If you just copy down that number, 310-598-6677, someone will be happy to sign you up over the phone with that $7 offer, okay? Now, I promised you I would take questions at the very end. If you do have any questions, now is the time to ask. You can ask me live right here, and just go to your question and answer box and type them in, and I would be happy to ask and answer any questions you have. But remember, this offer is going to be for a short time only. We're thinking of raising the price. So we've had such an outpouring of people that are now taking our trials. We have so many, we feel maybe we're giving it away. So this is a great time to take advantage of this $7 deal. Okay, Steve is saying, what is the price and the cost after 30 days? I believe after 30 days, it goes up to a $97 price. But trust me, once again, I have used platforms in the past, I often state, that have costed me anywhere from $250 a month to some were even close to $500. And that is a really expensive price. You're getting all this information that's taken me 30 years to accumulate. And if you decide to continue after 30 days, it's still less than $100 a month. So it's jam-packed with information, trading education that can really take you and help take you to the next level. So that's what it's there for, okay? Range extensions, someone's asking, these are done automatically, all we have to do is click it on? Yes, that's what we explained. The beauty of the platform is that it's all done automatically for you. So that's, you know exactly where the range extension is. It really will help you. Let's see, can you look at the chart, individual equities, and determine the next entry point for the equity? Well, remember, once again, what we're talking about, what we provide on our platform are all of our education and strategies. I can, we don't have access to live charts right now, but on our platform, if we have signals, they're generated using our proprietary techniques. If it's a technique based off something that you have designed, that's up to you. But on our platform, we have upwards of 9, getting close to 10 different strategies for different, different personalities. Someone wants a pullback strategy. We have a couple of those. Someone wants a strategy that is used for continuation markets that are in fast moving trends. We have strategies for those, and so on. So each and every one of them does automatically determine the entry point and determine different entry points. So remember, these are not systems. We do not teach nor do we trade systems. What we teach are strategies, and strategies are different from systems in the fact that they're still rule-based, roughly about 70% rule-based, but they leave about 30% for discretion or for insight. And the insight comes from your experience and from us working with you, so you can decide whether you want to use a certain entry, because we give you about 6 or 7 different entries. You can decide whether you want to use a specific stop placement or a specific exit point. It's entirely up to you. And range extensions are just one of the different exit points we teach you in our courses. We have upwards of 5 or 6 different ways to exit markets. This is just one, and this particular technique is one of the many different ways to use the range extensions. So there's lots of ways, but ultimately our philosophy, once again, is you're going to make that decision, not us. It's like a buffet. You know, we're giving you the main course, which is our strategy or our techniques, and then you have to decide at the buffet line how you want to exit, how you want to enter, how you want to place your stop. Do you want to trade conservative version? Do you want to trade aggressive version? Those are all your decisions. This is how you have a favorable experience. This is how you have a consistent method, okay? Is there a scanner? Yes, we provide a scanner for strategies. We also provide a scanner for our different proprietary tools that we have on the platform, okay? But remember, the scanners, I should say, the strategies are entirely different. I believe you get one of our free strategies with the 30-day trial. But we also, like I said, we have upwards of 9 different strategies. We can't give those all away for free. Some of those are different costs, all the way up to $3,000. But you get a basic one plus all these trading tools for only $7. You can't really beat that price. It's fantastic. Okay. So if you have any more questions concerning the tech support or how to use scanners or how to apply them, you can contact our trading consultants at Pro Trader Strategies. Once again, they're manning the phones right now. They would be happy to answer any question in terms of tech support. In terms of teaching or how to actually apply them to your trading, that's where you get my private email address, and you can contact me whenever you like, okay? So this is a great, I mean, I can't think of $7, as I've often stated, you probably spent more than $7 just in commission costs alone last week. $7, you're getting over 40 years of education information that I've accumulated. So it's a great offer. And then you can decide after 30 days if it's meant for you or not your cup of tea, and that's it. We'll say our thanks. But most of I would say upwards of 80, maybe 85% of all people who take our $7 offer continue to stay because they've seen in that short amount of time that it really helps their trading. And that's all we're trying to do. We're trying to take you to the next level so that you can become a consistent trader. Let's see, another question. Steve, hi, Deepak says, you gave one example where you mentioned you would have profited on the 100% extension, but were stopped out of the 200 range extension price level. But you actually could have profited on the 200 range if you set a conditional alert if your brokerage software to exit the stock when the price touched. Yeah, well, sure. In other words, that's your decision how you want to trade. This is what we encourage. So I can trade it one way. You can trade it another way. Is one way right and one way wrong? No. If you wanted to trade it that way, Deepak, and have a conditional alert, sure. That's good. That's what we want. See, when you have your input, as I said in the opening statement, the only way you become a consistent trader is when you are a part of the process, when you have your own input. And you just mentioned an example of where you would have. Where traders fail is when they say, well, I'll go to that trading room and do everything this guy says I'm supposed to do. He'll tell me where to exit, tell me where to buy, and tell me what time frame. That's a recipe for disaster, and we don't believe in that philosophy. All our job is, as a mentor, is to provide you with the information and to show you how to use it and to work with you so that you feel comfortable. But you have to make the decision. If you wanted to exit and get an alert to exit there, that's fine. So that's what we encourage. Now, if someone said, no, I want to go and use the other method that Steve said, the 400, or I want to get out at everything at the first level, that's fine. There's nothing wrong with that. What's wrong is when you put your faith in someone or something else and take all of yourself out of the game and let them decide for you. Once again, that's a recipe for disaster. Take it from someone who traded that way 42 years ago when I first started. It doesn't work. You will ultimately give everything away. You have to be a part of the process. And this is what we're trying to do, as I just shared with you today. This is just one of the numerous tools we have to make you a part of the process. And so come on board. $7, I can't think of a better way to educate you and to get you to become a consistent trader. Once again, that's the link down there you see at the bottom of the presentation. It's not live, but they have a live link in our chat box. If you're still having trouble or more questions, please do not hesitate to contact Pro Trader Strategies. They have trading consultants manning the phones. You can call them directly at area code 310-598-6677. There's absolutely no obligation. Or you can purchase the $30 trial for $7 over the phone with them if you like, okay? $7. Remember, once again, If you go out to breakfast today, you're going to be spending, if you go out alone, you'll be spending close to $20 just for one meal for today. You're going to get 42 years of experience and of education I've accumulated for only $7. And at the end of 30 days, it's your choice whether you decide to stay on or not, okay? Most students do, but that's, once again, it's up to you. So as we close here, let's take one last look at our disclaimer. And I just want to say, I hope you learned a little bit today. Remember, this was an educational presentation. I hope you learned how to apply range extensions. But more importantly, I look forward to all of you becoming students of mine and taking the $7 trial on our platform. Thank you so much. Have a great holiday weekend, and I'll talk to you soon. Bye-bye.